In this video, I'm going to be talking about one of the ways you can build a multi-million dollar property portfolio in the easiest way possible. We're going to be going through 5 key steps that you need to do to build your multi-million dollar portfolio to give you choices in retirement and create a level of financial freedom. Now, when we talk about multi-million dollar property portfolio, it doesn't mean you're going to be mega wealthy. You're not going to be reigning in the cash. You're not going to be going to big football stadiums and living it up in box seats. This is more about creating passive income between $50,000 and $150,000. This means you can get out of your job and start doing the things that you love and working on passion projects. Now, I'm passionate about a lot of things. I'm passionate about property. I'm passionate about people, about soccer, about my faith. There's lots of different areas I want to spend future time in. And so investing in a property portfolio that brings in passive income for Emily and I, and also having the opportunity to build our business and work on other ventures is why I've invested in property. But if you're looking for an easy way that you can sit at home and let other people do the legwork for you, we're going to be talking about a more autonomous way to build a property portfolio. The first step is to know exactly what you're trying to achieve. Without setting financial goals, you've got no target. You've got nothing to work towards. Do you want 100 properties? Do you want 10? Do you want 5? Do you only need 1 or 2? You need to know exactly what your financial goal is to actually set that target and work towards it. Now, you can have moving targets, that's okay. And that's exactly what we did. Emily and I have set 3 levels of passive income that we wanted to achieve, and we're working towards each of those targets. So our first target was $50,000 passive income. Our second target was $100,000 passive income. And our third target was $150,000 passive income. Now we know our financial goal, it's time to set a strategic plan. Now, the best way I like to set strategic plans with my clients is to work backwards from that end financial goal. Say you're looking for $120,000 passive income. Let's work out how much of an asset base, how much level of liabilities and equity you need to create that level of passive income. Because assets minus liabilities equals equity. And equity at the end of the day is what you're going to be earning passive income on. We also need to know what limits you have. So what is your limit in terms of borrowing capacity? What is your limit in terms of deposits that you can acquire or cash that you can save to go towards building a property portfolio? Now, in Emily and my situation, we started with the cash that we had available to us. We worked very hard to save around $66,000 to buy our very first property. And we bought our first property for $800K, which means we didn't have a 20% deposit down, but we did have a plan. The plan for us was to continue to save and use that cash to upgrade and renovate our very first home. And that's exactly what we did. We took our savings, we renovated on our property, and eventually our incomes in our day jobs also grew. From about $50,000 a year on our day job incomes up to around $70,000 to $80,000 a year. So the increase in serviceability and the increase in value that we created on our first property allowed us to pull out equity and to continue to grow our property portfolio. Now, you might not exactly know what property you're going to buy next, but you can understand your serviceability. So you can know what is your financial capacity and what can you buy in terms of your next property. You then need to look to properties 2, 3, and 4, and how property 1 is going to open the doors to allow you to get that second and third property. Because most Australians get stuck. Now, around 70% of Australians only own 1 investment property, and less than 10% hold 3 or more investments. And so finance is one of the biggest things stopping Australians from growing their property portfolio. So as part of your strategic plan, make sure you map out how that first property, whether you're creating equity or cash flow, is going to enable you to buy properties number 2 and properties number 3 and so on. It's going to be different for different people. We're not in the same jobs. We don't have the same lifestyle. We don't have the same expenses. So you need to work out what's the right option for you in terms of your next purchase. Do you need to focus on capital growth because you're struggling to get together deposits? Do you need to focus on cash flow because you're looking for passive income and you need to boost your serviceability? Or would you be better off finding a property with a balance of growth and cash flow? It all comes down to your situation, but make sure you map out a strategic plan working backwards from your financial goal. And for me, that's around, say, $100,000 or $150,000 passive income. And so based on, say, $100,000 of passive income, you need roughly $2.5 million worth of equity to create $100,000 of passive income. Now, that might mean you've got a $10 million property portfolio with $7.5 million of debt, or you've got a $2.5 million portfolio with no debt. Every property portfolio is going to look different, but make sure you work back the numbers. And to get that calculation, all I did was take $100,000 and divide it by 0.4 or 4%. Now, this would mean if I had a $2.5 million asset base, generating me a 4% net return, that I'd be getting $100,000 passive income. Now you've got your financial goals and you've got your strategic plan, it's time to go out and start building your property portfolio. Now, this means diversifying and finding the right assets that suit you. For Emily and I, it meant starting with inner city Brisbane property because we were focused on capital growth. We then realized that we needed to build our asset base, so we went for more bread and butter deals. All a bread and butter deal is a property that's located in a growth potential location. And so we bought, say, 10 kilometers on the north side of Brisbane and 6 kilometers on the south side of Brisbane to find properties in those inner middle ring that had very strong growth potential. That also meant they didn't have the best cash flow. These were weaker cash flowing opportunities. But on the balance of things, Emily and I knew that we needed to go for growth first to build our asset base and to build our equity and then transition to cash flow. And that's where we started to look to diversify our property portfolio. So once we bought our 3 properties in Brisbane and renovated them and added value, that's when we started to look for our cash flow opportunity. Now, instead of buying 3 or 4 lower priced properties that also had a good yield, we decided to go big and we bought a unit block in Coffs Harbour for $1.4 million. The great thing about this property is, again, it had renovation potential. It was in a great location between the jetty and the main part of town. So it was very centrally located, a solid build, and the roof was being replaced as part of the purchase. So you need to work out exactly what properties are going to suit you. Now, this might be where you engage someone like myself. I run a buyer's agency here in Brisbane and covering Southeast Queensland called Purpose Property. And we help everyday Australians buy their own home or buy an investment property here in the greater Brisbane market. So if you need that help and on-the-ground local knowledge and experience, then maybe hiring someone like myself in a buyer's agent suits you. Now, I say to a lot of people that you don't need a buyer's agent. It's up to you. If you're willing to spend the time, spend the money and invest in yourself and go out there and find those assets and pound the pavement, getting to open homes, physically seeing properties, negotiating with agents, then absolutely you can do this yourself. But Emily and I used a buyer's agent or a financial advisor to help us buy our very first property, and we saw value in that. So if you want to use my knowledge, skills, and experience, then you can leverage off that by heading over to purposeproperty.com.au to book in a free strategy session with myself. Either way, step number 3 is to acquire the assets you need to acquire and diversify them. Don't just buy a bunch of properties in one street. Find locations that suit your price point and suit your overall strategy. Step number 4 is to refinance and renegotiate your loans. Now, part of building a property portfolio here in Australia is dealing with the banks and the lenders and working out which lender is going to give you the right financial product. This means chatting with lots of mortgage brokers and lots of banks and getting different opinions and making sure you're getting the right loan for the right property. Now, as you look to build out a property portfolio, this gets more difficult. CBA, for example, said to Emily and I that they weren't going to lend us any more money for our unit block purchase. So we looked at second and third tier lenders to give us a deal, even if we had to pay, say, a 1 or 2% interest rate premium. So look at the financing strategies. Can you set up in company and trust structures? Can you build out in your personal name and then transition to those structures? Or can you jump and refinance from this bank to another bank to get a 1% interest rate improvement? And if that's $1 million of debt, that could be $10,000 a year of interest saved. So look at the financing strategies, chat with multiple brokers and banks, and make sure you have your numbers down pat. That means you need to understand exactly what's coming in and out of the property portfolio, what your assets, your liabilities, your equity looks like, and be ready to provide all of your financial documents at the drop of a hat to a broker or to a bank to get yourself a better deal. Then the way I like to structure this in my own portfolio is to use a Google Drive and have a list of folders with identification, rental statements, anything that a bank has requested from me in the past, and then you can just hand that out to multiple brokers and banks if you want. Now, I personally have been dealing with a mortgage broker recently and have had a good experience so far, but you never know, you might need to reach out to multiple brokers or multiple banks to get yourself the best deal. The important thing here when you're dealing with a buyer's agent, like dealing with a mortgage broker, is you find someone that's the right fit for you. You need to find someone that you gel with, that is aligned in terms of your goals and your values and can actually help you get from A to B and not just do the talk, they need to walk the walk. So I'd like to discuss with them, have you done these types of loans before? Do you think this is possible? And can you lay out the types of lenders that you'd be suggesting to us in terms of refinancing one of our properties? I'm personally looking at refinancing our unit block to get ourselves a interest rate decrease and to potentially access some equity. So I'll let you guys know how that goes in the next few months. This leads me to step number 5, which is active management and monitoring. Now, what this means is you don't have to do this all yourself. At the start of this video, I mentioned that this is about becoming autonomous and sitting back and letting other people do the work. So each of these steps, when it comes to strategy, buying in locations, financing the properties, you can find a professional to help you. Now, in the start, it might be dealing with a buyer's agent and a mortgage broker, and then it might be your accountant. So you can build the team you need to sit back, make a few phone calls, sign a few signatures, or click a few buttons to actually build a multi-million-dollar property portfolio. Now, in reality, the more you invest your time and the more you build your knowledge, the less risk you're likely to have and the more success you're likely to have. But you can outsource a lot of these things to other parties and use their knowledge and experience to help you. So when it comes to active management, this could be a property manager. Now, again, you can absolutely manage your property yourself and save 7 to 8% in terms of management fees. But if you use a property manager who's a professional, it can de-stress the property, it can have a third party between you and a tenant, and generally they can help you vet a tenant successfully, and they're going to do a lot of the hard work in terms of vetting the tenants, making sure they collect the rent, and giving you up-to-date reports, both from a financial point of view and physical inspections of the property. So a lot of these things are easy to understand in concept. Conceptually, you can understand that you need to set financial goals. You need to develop a strategic plan. You then need to go on your acquisition and find the right properties and finance them and actively manage and monitor your property portfolio. The much harder thing here is to implement this. A lot of people talk about building a property portfolio, but as you can see, based on the stats here in Australia, around 70% of investors only get to one investment property and less than 10% buy 3 or more. So what this means is you need to be taking action. And whether that's outsourcing it to trusted parties that you built rapport with, or taking it on your own back and building your property portfolio, at the end of the day, you need to take action. This means making a few emails, making a few phone calls, and potentially getting out there if you want to save a few dollars and do this yourself. If you're looking to invest in yourself and build your real estate knowledge, head over to purposeproperty.com.au to check out my real estate investing course. For less than $500, you can learn how to build a multi-million-dollar property portfolio starting from scratch. There's over 3+ hours of content and over 40 videos in the course. We also provide templates and recommendations as to how you can build your property portfolio for success. So if you're interested in the course, you can pick it up for less than $500 at purposeproperty.com.au. If you're interested in retiring in the next 10 to 15 years, click this video over here. Thanks for sticking around. I'll see you in the next one. Peace.